Well, it's a great day to be talking individual stocks because so much money is being made. It's a good time to invite Porinju Veliyath, ace stock picker and MD and portfolio manager at Equity Intelligence India. Porinju, hi, good morning. Great speaking with you. You know, we were going through some of the stocks that you had picked up for us during our 16 for 16 show that we started the year with. And one of them was Biocon, which has now been hitting new highs over the last, say, couple of weeks. Is that a story that you would still keep the faith in, or do you think that people have missed the bus there?
I don't think people have missed the bus, Sonia. This stock has a long way to go. And, you know, I was talking that point of time. First time I bought into Biocon a few months back because it was at an inflection point. I think my strength is, mostly at identifying the inflection points of companies and perhaps the industries. And that's very important for long-term value investing. So Biocon, I feel it has moved by 35–40% in the last few months. It can go up by under 100% in next 2 years' time. That's the kind of potential this company has, and it's on the right track. That initial dull times of a decade after the listing of the company, that's over. That's why I told it was at an inflection point, and I am very bullish on this stock. We continue to hold in our PMS.
Okay. Speaking of inflections, Porinju, cement is one sector that's done extremely well. Are there still stocks that offered inflection points there?
Yeah, a lot of the stocks from the industry has gone up already, so investors should be evaluating those rise. But there are still some stocks in the industry which I think are worth looking at. You know, some companies like Orient Cement, which haven't had any big run-up in the recent past. See, more importantly, I feel the whole Indian economy is at an inflection point. There are some of the industries. That is the bigger picture investors should never forget. No, actually we have gone through a period of mispricing of Indian equities. If you see last the January month.
Yeah.
It was not any rational bottom. I used to use the word rational bottom all those time. Even at around 7,000, I used to say 8,000 should be the rational bottom, which is happening now. But it happens in the market. Nobody can help it. It's a lot of leveraged positions and speculative activity which guide in the short term. But with a bigger picture of Indian economy, which I always believe, what long-term investors have to watch is the political management of the economy. From that perspective, I strongly feel India is at a historic inflection point, not just an inflection point. And it's going to go a long way. And it's a golden opportunity for investors to make superior returns in the next 5–10 years.
Okay, so you just briefly mentioned Orient Cement, but I want to talk about that in detail, Porinju, because I was going through the earnings and the operating profits have actually fallen 40% this quarter. The profits are down 78%. I know you like to take contrarian calls, but it's a gutsy call to buy a stock where the numbers are so weak. At what point do you expect to see a turnaround?
No, here I have a love towards bad numbers when it comes to quarterly numbers. That is where I have made most money for my investors and myself. Because some good businesses, some worthwhile work businesses, great companies, when they report a quarter or two bad numbers, and the market participants react very, very severely, and it goes down sometimes 30–40%. That happens in not a sophisticated economy or stock market. So I feel that's a great opportunity because you cannot judge a company by a quarter or two or maybe sometimes 1 year numbers. Today, most market participants in India, they are looking for numbers. If they don't see numbers, they throw away their shares. And that's an opportunity for smart stock pickers. There can be temporary challenges for some industry-wise because of the bad environment for the industry or the general economic environment, or maybe company-specific temporary issues. So mostly, some companies, some great businesses worth holding for next 10 years or 5 years. Such companies report a quarter or two bad numbers. I think that is where you make multi-baggers. Of course, Orient Cement is not a big multi-bagger idea, nothing like that. The company is having, now they had 5 million tons cement. They have added another 3 million. Beautiful, it's a great, very efficient cement plant. The new one. Now it is 8 million. The company has talked about, making this 3 million, the new capacity at Gulbarga in Karnataka. They will be making it at 10 million. So totally the cement capacity is going to be 15 million for this company. More importantly, this additional 7 million they will be set up at a very cost-effective style. So that's going to be very good. So there will be good growth ahead for this company. And India, the way the government of India today envisaging projects going forward in infrastructure especially, I think cement will be definitely an important industry to look at.
Porinju, you know, there is some bit of a lens of mutual funds on mid-cap stocks. But on small caps, it's way more difficult. So that's where we want your expertise. Have you identified any of the small guys who will be tomorrow's mid-caps and day after tomorrow's big caps?
A small company which I have been just looking at, you know, when I was asked to give an interview, Kalyani Steel. Now the stock is at around 155.60. It's the Baba Kalyani Group company. This company, you know, they're having good numbers with the current fundamentals of the company or the last year earnings. This stock is available at 6 PE. It's a big company, I think something like 1,200 crores turnover, and the market cap is around 700 crores. See, defense is something we all are talking about, and now it's dying down, you know, the talk, the fancy, but it is going to come up. See, it will take time. Now the government talk about defense, and you won't see in the next quarter numbers for the companies, potentially in the defense sector. This company is, you know, into the special steels and forgings and alloys, high pressure, you know, that kind of a very specialty business. And Bharat Forge has that big tie-up with Rafaels, and you know, the raw material for the tanks kind of thing can be sourced from this company. So it can potentially grow into a very big league company. So today, when it's available at 6p kind of a valuation, I think investors should have a look at that and monitor, you know, how these companies are going to operate in the future and how the numbers are coming out. So I feel investors should bet on some such safe small caps and mid caps in the market going forward. There are a lot of them in Indian economy, in Indian market, I mean.
Well, you know, Porinju, as they say in this market, you win some, you lose some. I mean, on one hand, Biocon has given you great returns, but on the other hand, the other stocks that you recommended at the start of 2016 have not done that well. I mean, Anant Raj was recommended, I think, at 45. Today it's about 39. Indian Hotels has come off quite a bit. It happens in a market like this, but do you still, you know, hold on to these stocks, keep the faith, or have you sort of churned already?
These are the 2016 stocks and we are half the way. So there is a lot of time to prove it. And of course, win some, lose some is a bad idea. You have to win a lot and lose very few. That should be the game. And that is how India is placed now. For smart stock pickers, you know, you can win a lot of them and lose very few. So I think equity is going to be in fancy going forward as an asset class. I'm very confident on a macro level. So this Anand Raj is something which is underperforming even in my portfolio. I still haven't left the hope on real estate companies, selective real estate companies who are going to be definite survivors. And it's a question of time. Market will come to a rational valuation of these stocks. It may take time. People want to see numbers. Maybe the coming quarters you may start seeing numbers. So that time, now when Anand Raj goes to 80 and 90, a lot of people will justify it with numbers. Actually, value investing, we should try to analyze the potential future numbers. From that perspective, there is no country in this world today, no economy in the world, which offers as many ideas as India offers at this point of time. Okay. I am very bullish.
Okay. Well, Porinju, you know, you've spoken about earth-shattering changes in India, inflection point, infrastructure would obviously be a theme. So tell us about KNR Construction. I believe that's a stock you like.
Yeah, KNR is a very clean company. In fact, I have been buying this stock since 40, 50 rupees 3 years ago. And the stock has it always used to keep the balance sheet clean and healthy. That is the reason this stock has been performing very well. When other people went on, you know, bidding aggressively for projects and they were making losses on that later, had a very highly leveraged balance sheet. Now they are struggling to manage it. There are some companies kept the balance sheet strong, like even Ahluwalia contractors, maybe a J. Kumar. See, infrastructure, we talk about railways, the port and the waterways. We talk about the roads. See, once the government announced that, it takes at least 1-2 years for the numbers to start coming in for the companies who bid for that and execute the orders. Now, government offers a 5 lakh crores worth of road projects, and people are looking at the numbers of these road companies in the next quarter. That is foolishness. It doesn't work like that. So investors with long-term perspective, they should watch which companies are going to benefit with this unprecedented infrastructure move by the government of India. I really appreciate. Now, Modi government has completed 2 years. I have no politics, but I am telling you, investors always tell don't discuss politics. You focus on the stock markets.
Sure. Porinju, we have run out of time, but you have given us enough food for thought. Thank you so much. And the key takeaway, I think, is you should win more than you lose.